Farmers in India are rationing fertiliser. Brazil just panic bought everything it could find. Africa is planting with whatever's left. And Australia's watching. A mineral that most Australians can't name is the reason half the world eats. Right now, it's not moving. This is Intelligence Optimised. I'm Todd Crowley. A few months ago, I sat down with John Cotter, the man sitting on the largest phosphate deposit in Australia, 130 kilometres northwest of Mount Isa. John told me something that didn't make the news. Australia imports more than 90% of the phosphate rock that goes into our fertiliser. And when global shipping breaks, every 7 to 11 years, like clockwork, we get a crisis. We're in one now, except this time it's not a cycle. This time the clock isn't resetting. Northwest Phosphate holds the last remaining domestic fertiliser rock mine in this country. The last one. We haven't moved fast enough to back it. We have no strategic fertiliser reserve. None. The planting window doesn't wait. This episode was recorded before the crisis hit. Listen to how accurate the warning was, then ask yourself why nobody acted on it. John Cotter, welcome.
Thanks very much, Todd. Good to be with you.
Mate, really appreciate your time today. What you are doing is big, it's bold, it's nation building. So let's start with that big picture. Why is phosphate so critical to both food security and national security in Australia today?
Yeah, thanks, Todd. Well, look, firstly, let me say that phosphate is not a sexy industry, and neither is fertiliser generally. But it's one of those staples in society that we never spend a lot of time thinking about until we really need it. So within the context of fertiliser generally, and as a good example, when COVID hit, it was the fastest resolutions that the UN had ever done. It took 2 days to open up COVID supply lines because Eastern Europe didn't have enough fertiliser and you were looking at hungry people. So the sheer speed in which people have to realise that this is important doesn't happen until those supply lines are cut. And phosphate is, there's an abundance of it in the world, Todd, but it's in, some pretty hard countries. Morocco is obviously the biggest producer, and they do a lot of rock exports, a lot of finished product. But the moment those ships become hard to get to Asia, life gets very interesting. And so to answer your question directly, phosphate is essentially the kickoff nutrient. So it's what's required for photosynthesis and root development. So without it, if you look at a country like New Zealand, the biggest industries in dairy don't work without phosphate. It's as simple as that.
Wow. And obviously food security is very important to national security. And you've mentioned dairy is obviously one particular industry that phosphate is a major input into. And many Australians don't realise we're down to our last remaining domestic fertiliser miner. So what does that mean for our agricultural sovereignty?
So I think from a sovereign protection point of view, it's a little bit like everyone will remember the AdBlue crisis in trucks, because in large part, Incitec Pivot shut down Gibson Island, which was a urea plant. These types of commodities are boring manufacturing that no one really pays attention to. And a lot of that is to do with the cost of energy, Todd, in Australia. So a lot of those energy-dependent processes, when you have countries, even like America, who's still not a first quartile cost producer, but when they're using shale gas, it's cheaper for a major company like Dyno Nobel, Incitec Pivot, to use gas in America and float finished synthetic fertiliser to Australia. We're only ever 50 days away from 50,000 tonnes of fert coming from America here. So what that means is you have a reliance on the supply chain, and farmers don't want to invest typically more than one ag cycle out, right? No one wants to be in the money or out of the money for very long. And so what that means is Incitec Pivot is in the process of selling it. Phosphate Hill mine at Mount Isa, it's shut down at single super plant in Geelong. Wesfarmers CSP have shut their plant in Perth. Another plant in Taranaki in New Zealand just shut down the other day. So we're really getting to the point now where we've got a bit of stuff on the ground and no way to process it. So it makes us really think, if there is a big supply chain shock again, we could be in a world of hurt. And I'll just, throw out the last example is you've got quality concerns as well. If anyone listening jumps online and has a bit of a Google of FERT, there are farmers now bowling over their silos because the fertilizer from China has been stuck in the top and they can't get it out.
That's crazy. That's a big risk, right? A big risk to our agricultural sovereignty. But one thing you mentioned as well, John, like you said, we're 50 days away from supply if need be. But if those maritime supply lines are cut, just like we've got our strategic fuel reserve in the US, we're buggered. But also, I dare say that the US could requisition that product if they needed it more than we. Surely that's a risk for our food producers too.
No, absolutely, absolutely. And I think some of the more cynical people will go, okay, well, we don't have fertilizer, we can still grow things. You go, yeah, sure, but the yields drop away so significantly, so quickly that you get to the point that yes, we are a food exporter, but the math, in those doomsday scenarios, the math stacks up pretty quick that you're actually putting out, some 6 million small business farmers across Australia suddenly stop. Like, it's a big to our economy.
And in a time where farmers, are leaving in droves, like the next generation don't want to be farmers because one, it's too hard and there's no money in it.
That's right, and the people replacing them are long-term, patient capital holders like Canadian pension funds. Well, what happens when that commodity investment stops making a return? That capital is gonna fly, right?
Yeah.
You can't just turn this stuff off and
No. So, John, tell me, how did Northwest, come to be the largest holder of phosphate resources in Australia?
Todd, it's a long story. It's the normal, overnight success, 10 years in the leggings. I I took our first tenement in around 2013, 2014, on a property called Bar Creek, and went out and sat with the owners. I come from an ag background myself. I had been involved in looking at fertiliser production in Mount Isa previously, with some of the previous tenement owners, and they were looking at doing a very large plant and making finished fertiliser, and ultimately they went into receivership. So I picked up some tenements, started drilling them out and learning about it, and then bought the rest of the tenements out of administration in 2021. We've then spent about $25 million to date, bringing them back up to scratch, paid out a lot of the local community clubs that were left out of pocket, paid all the rates, did all those types of things, kept ourselves very quiet, just only brought in sort of 15 farmers with me because phosphate's not a commodity the equity markets really understand or want to invest in. And so we just went through that. We raised a couple of $100 million to do a concentrator plant, and we're moving now through a path to go through the Port of Columba with Sibanye-Stillwater in the north. That has left us now with 65,000 hectares of phosphate tenement, 3 mining leases. Our signature asset is Paradise South. So stage 1 on it is 201 million tonnes of measured reserve, and then we have 54 million tonnes of measured concentrate. So that puts 50 years of minimum life into the north, but we've got a total reserve somewhere close to 800 million tonnes. So we're talking about a very long life asset of high quality.
Wow. Mate, and just for our listeners, can you tell us where is Paradise South? Where's it located in Queensland?
So we're based in Mount Isa. If you drive north 145 kilometres towards Camberwell, you come to a region known as Gunpowder. And that was the original Lady Annie phosphate mine, which was discovered by BH South in 1970. And it's the top of the Mount Isa inlier. So the Mount Isa mines, which is owned by Glencore, basically that sort of copper oxidization follows all the way to the north to Lady Loretta, and they're our neighbours. And then you've got Cap Copper around us as well. And it's quite a heavy mining area by the highway to the Barkly Highway up to Camberwell.
Yeah, right. So mate, you mentioned obviously earlier about the volume of the product, but what makes this resource and the location so unique?
Um, so the phosphate deposit that we have is at the western boundary of the Georgina Basin. So it runs essentially, it's the old inland sea that runs all the way into Tennant Creek. The distances most people overseas have a hard time getting their heads around is, there are quite large phosphate deposits across Australia, but they're so isolated and require hundreds of millions of dollars of connection and infrastructure. So mining, typically, if you've got water, you've got power, you've got roads, you're sort of about 3/4 of the way there. But that makes our project quite significant from that point of view. The second thing is the size and tenor and consistency of the deposit, which allows us to make a consistent concentrate. So phosphate usually is measured at 32% phosphorus pentoxide, which is P2O5. We produce a 34.5, 35% concentrate, so it's quite a premium in the market, and that's highly desired by single super producers in New Zealand and the southern parts of Australia, particularly with dairy cattle. And that feeds basically dairy cows need 22 milligrams of phosphorus per day when they're lactating with a calf. So that milk production is very linked to phosphorus. And then you've got nutrient hungry countries like Indonesia and India, where we look to supply those. They want long-term mining tenor. They need a low pricing profile that suits them, and you can get around weather events. So all the challenges of developing the north, Todd, that's probably why we are a bit better than everyone else.
Yeah, right, and that's a big job too for people who aren't familiar with the north of Australia, especially northwest Queensland. That's a big job, and mate, you're currently looking at integrating your operations with the Century Mine infrastructure and the Port of Corumba. What would that unlock for the region?
Yeah, it's a good question, Todd. On the previous point, and the reason we've ended up looking at this option to go through the north is that we were looking at mining cost in the order of $30 or $40 a ton, which is globally it's so cheap, just such a great resource. But then it was like $145 a ton on rail to get it to Townsville. So suddenly you're uncompetitive because you've got the most expensive railway line, if not in the world, in Australia at least. So we needed to come up with a different way of doing things. We had been talking to the owners of Century since MMG owned it, and then a new company called New Century Resources took it, and then they were bought and delisted by Sibanye-Stillwater from South Africa. That gave us access to essentially a replacement value flotation plant up there of sort of $2 billion plus a 304-kilometre slurry line to the Port of Corumba. So by repurposing that infrastructure, you've got something that's come to its end of natural economic life, but that will then keep 400 jobs up there for another 50 to 100 years. So for people in the urban environments to have the number of Indigenous jobs and regional jobs in a place so remote that can support, an area like Corumba where you could put 45 staff out of a population of, 400, that is a massive economic lift. That just the sheer volume of support that provides decision makers to go, okay, well, that means that our ambulance is now sustainable, our policemen, our doctor, our nurses, And then that strengthens that whole northern region because you've got the stability of jobs there for the locals, particularly our Indigenous partners.
Yeah, right. And so you're looking at creating 400 plus jobs here, and there's billions of royalties that are being projected for this particular project. That transforms the northwest of Queensland. That transforms Queensland, especially at the moment. Looking at the books, that economic outlook for northwest Queensland. What you're doing there is surely putting air in the tyres. How are the Queensland government supporting what you're doing?
We've found the Queensland government very supportive. They're making decisions, which is a big thing. The nuance on that is the previous administration were very supportive. I think everyone is supportive of developing the North in that way, in an environmentally sustainable manner, and that is what we've always been about. But what we're seeing now is actual decisions being made to go, right, you need this certainty on this particular license. Great, here it is. Here's the decision. And you're getting a quick yes and a quick no. Or if it's a no, what if you do it this way? So there's flexibility in negotiation, something that I think the state of Queensland's not been really good at for the last sort of 15 years. The second thing is you've got, I guess, a massive revenue problem in the state of Queensland, and you're looking at a real risk in this upcoming budget of a credit downgrade. Projects like ours, where the Sibanye team have done an excellent job in rehabilitating tailings pond, reprocessing zinc, getting down those environmental bonds, decreasing the risk to the state. These are the things that this particular government have gone, so we're seeing a decrease in our liability, an increase in the region, and an increase to our check. Geez, why would we get in the way?
No-brainer.
So that, and I think the other thing, particularly in the urban environments, I keep labouring this point, Todd, because I think as we become more urbanised, we forget our Queensland culture. The amount of economic uplift in the regions that one full-time job provides has a multiple times knock-on compared to someone in the service economy in southeast Queensland. And that cost to government, it's the old figure, a heart attack in Longreach is $200,000 more to the taxpayer than a heart attack in southeast Queensland.
Yeah.
And we've got to remember those stats. So putting jobs out there decreases that cost base for all of us. And I think that, as a taxpayer, that's something that we should all be excited about.
Mate, that's so important. And John, you mentioned to me the other day offline, no one in the capital city really realises what it's like to be, in the bush or come from the bush, and the hard work that they do. The food just turns up on the plate in Brisbane, and thanks for coming. They go and order it again, along with another $25 glass of Chardonnay. Mate, you got this initiative around big hats in town down Queen Street. Tell us about that.
For those listening in, we're jumping to the end about wearing hats in Queen Street. But what this was about was we should be proud of all the minerals and resources that come from our land. We should be proud of the fact that we have strong environmental laws. We should be proud of the fact that it's in harmony and balance. And everyone talks about coexistence and these types of things in the region. Well, I love areas like, Dingo, Blackwater, Emerald. You go home on the weekend, you run a few cows, you do some cropping, and then you're back in a mining truck on Monday, working for the group that's probably bought your family farm out, because that's what the communities do. They celebrate all resources that benefit our state. And I think, I compare ourselves to, say, Texas, and the rate of development 200 years ago that America had, and being 200 years younger than America, I'd sort of look at it and go, yes, we've got a different framework now, but we're not proud of our resources and our earning potential. And we're wasting some of those things on frivolous things that could set us up for the future. How do we put those banks aside of cash to grow our infrastructure, to grow our regions, to be proud of our regions? And I look at sort of, let's pick a policy at top, the Northern Australia Infrastructure Fund. It should have done far better than it's done, but, a bit of a critique of the Southern Liberals that put it in. It was designed exactly what it was to do what they wanted it to do, which was not lend money on risky things in the north. And, the sad news is everything in the north is risky. We've got cyclones, we've got, magpie geese coming in and eating my melons. These things happen, but give us the trust and we can produce good things. If we can unlock that capital, we can provide the certainty. And so what I'm trying to do is create a message in 1 William Street that it's okay for us to turn up in a hat and go, you know what, I'm proud of the gas, I'm proud of the coal, I'm proud of the minerals, and I'm proud of the clean produce that goes all into making the way of living that makes it great to be a Queenslander.
Mate, I love it. I'll be wearing one of those hats down Queen Street, mate. Don't worry about that. Mate, speaking of which, speaking about being proud, believing and belonging in our culture, our identity, it seems as though this country's gone off track the last number of years. There's no North Star for us to follow. You've mentioned the great work that the Queensland government's doing for you, and this is by no means bashing a government, but how supportive has Minister King and Prime Minister Albanese been from a federal perspective of your mine? Are they supportive or are they standing in the way? Are there any issues?
We haven't had any issues, Todd. We went through the federal processes some time ago. I think, we have an internal saying at our place that you can't eat potential. And so we don't like making a song and dance. And I sort of look at a lot of the big miners and, you've probably seen in the press, my neighbours in Glencore have asked for some money. According to press reports, something north of $2 billion for the copper mine up there. And I think from what I'm hearing, Prime Minister Albanese will come to the party on that because it is it's a piece of significant national infrastructure. But I guess, Todd, my point is that you're giving money to a large foreign corporate that will probably trade sale its way out. And just stop fixing the problem for the next time. So I look at that. You've got something in the order of 20 to 35 tier 2 and 3 copper assets up there, right? They can't get the capital they need at what we call the orphan phase. So they'll prove up that they've got a reserve, they'll prove up the mineralogy and the metallurgy, and they'll go, right, now it's 2 years for us to raise $100 million or $200 million to turn it on. That pool of money, their government doesn't lend to that. They lend to drilling and then they lend to bailouts. And so if we were in Israel right now, their model is they fund 7 projects in the middle of commercialization and one of them will pay the bills for the next 20. And we've lost that ability to go, what's the market failure here and what's the speed we need to turn on all those tier 2, tier 3s? Because their alternative is taking, convertible debt auctions from an off-taker like Glencore, and of course it doesn't work. Glencore end up owning them, and you go through this cycle again, and you miss the commodity boom. So that's sort of what I'd call the hub and spoke model of Mount Isa is where I think Minister King needs to spend some time and go, okay, how do I get these juniors to turn it on quickly and provide good quality ore through something that we can all make some money off? Because that money then keeps people in Mount Isa. It means that the 20 kids that were bashing themselves up over the weekend that were in the Courier Mail actually have apprenticeships. These are the things that I just want politicians to concentrate more than the press release on. Come up and just see it through the next layer of detail. Just go down a couple of layers in your bureaucracy and see something through. That's what I'd like to see the feds do.
It'd be nice if they use this next term, especially to do that. And John, I guess also importantly, like it's been publicised that the government is strengthening ties across the Indo-Pacific. It's very important from a national and a regional security perspective. So, what role do you see Northwest playing in strengthening, Australia's relationships across the Indo-Pacific, especially when it comes to regional supply chains that you've mentioned?
Yeah, absolutely, Todd. Well, I guess I come from this with a little bit of bias. I through university, spent my time in Darwin taking live export ships across to Indonesia and Malaysia. So I have a deep passion for that region, and you realise how close they are and what a large population.
Can I just quickly say, so you actually, you got out of Mitchell Street and out of Monsoons and you got to the wharf?
Yeah, that's right. There's some good stories about watching cattle run across the Strand there that jumped off a ship one night, but I'll tell you that some other time. I think a lot of Australians are very naive to the sheer size and hunger of that Indonesian population. I think there's a lot of great cattle businesses and feedlotting businesses that do great work up there in feeding those markets. I think we are not familiar with how that Muslim population works and the trade relationships they have with other Muslim countries. So we have worked very hard on a relationship with the state-owned fertiliser cooperatives up there, Pupuk Holding Company and Petrokemia. So we've been approved to export rock into Indonesia. Because they see this as one of the highest priority in keeping their population stable. And that's probably the key point, given your business and what you do, Todd. Stability comes from stability in those base commodities of what every human needs to consume. And we want Indonesia calm, we want India calm, we want China calm. Food is one of those things that make things volatile quickly.
Oh, 100%. Look at the number of people in those regions alone, those governments, if they've got, 1.4 billion Indians, 400 million Indonesians, 1.2 billion Chinese, if they go hungry, there's instability, there's uprising.
Absolutely. Absolutely. And it's, the other thing, the corollary of that, Todd, is you look at policy intervention by government. So if you look at Sri Lanka a couple of years ago, banned synthetic fertiliser. Their crop yields dropped some 75% within 12 months, and the government was voted out and it was reversed. And so that is an actual case study in a country going, we are, I don't want to get into the culture war, but it was such a culture. It was we have to do this for the health of our nation. And they couldn't feed themselves within 9 months.
Yeah.
Now, I'm all for environmental controls and managing our balance. And should a sugarcane farmer put more nutrients than he needs in the Great Barrier Reef? No. However, there's a balance here about getting the right nutrient to the right plant at the right time to provide that.
Yeah. And so, mate, how does Northwest fit into Australia's broader national interest in maintaining, sovereign control over critical inputs like food, water, and energy? You just sort of touched on it a bit there.
Yeah, look, I mean, we have got that reserve. We've concentrated very heavily on making sure that our water and energy is solved. I cannot control the cost of gas out of the Northern Territory, which is why Incitec Pivot is now struggling to keep their plant online. Now, I would argue that there's a fair bit of corporate work that IPL should have done over the years with that plant. But I guess that sovereign control side of things, we've put up our barriers that, we're going to stay Australian owned, and take some equity from a few of our off-takers, but we're not looking to go and list and sell across to the US. We're not miners of the market. And I think that point, Todd, is not so much about the food, water, and energy. It's more that the capital flows in Australia do not come back to our base commodities and to our strengths. I think we're still such a young culture. We don't have the depth of wealth that, America has to focus on those things. So we're always looking for, explosive type businesses in critical minerals and things like this. And then ultimately, if you look at the potash market, which is in Western Australia, there was everyone got very excited about that. And there was $1.2 billion spread over 7 ASX companies. And the total market cap for all those companies now is less than 100 million.
Wow.
And so the equity markets get really nervous when those sort of things happen. Whereas my response to that, particularly that, puffer market crowd in the broking houses in Sydney. It's like, hang on, do you want to fund explosive growth, or do you want to fund a business that looks like private equity? It just returns a nice, healthy 20% for the next 50 years. So I think that piece there, Todd, has to be solved. Otherwise, we're just going to, as a miner, you've got to get the capital in to build your stuff, particularly critical minerals, which scares the absolute bejesus out of me. Your money's going to come from China. It's going to come from America, and to a lesser extent, the Arab nations. So I think we've got a lot of work to do on that in prosecuting the argument that it's in our national interest that things are investable.
So, mate, that's a really important point. How do we need a national? Do we need a sovereign fund specifically? For phosphate, given the importance of it. How do we get people to invest in major projects, critical projects like this?
Yeah, it's a good question, Todd. I mean, philosophically, I watched the election announcement around the sovereign fund on critical minerals. And I put on Madeline King's LinkedIn post at the time. I said, look, great. I'm looking forward to the reciprocal investments in metallurgy and R&D and water and power, it's a previous point. And this is the thing, is that if it's going to involve government intervention, it has to be well thought through. And I'm not a believer in government intervention unless there is a proper market failure. Because you end up picking winners, right? And so this is the difficulty I think that policy announcement now had. If there was a sovereign fund, I think it would be back to my earlier point about getting everyone in a room and saying, okay, do you have a reserve? Do you have a JORC statement? Do you have your off-takers? Where are you up to? And then it's a risk-appointed sort of grant system, or convertible to equity, which is a bit of a problem for the feds, but there is a path to do that. To say, hey, we're going to give you that almost that venture capital kickoff. And there is plenty of precedent in the technology space back when Turnbull was around. But we Australians, we want to go to the next shiny thing. Whereas, you know what? There is a bucket load of people out there that are doing exactly what I'm talking about, just in the coal space, because everyone's turned off it and they're doing successfully out of it. So I guess my question for government is, we do minerals really well. We do coal really well. Those ones that are hard because of government failure in infrastructure, water, power, maybe they're the ones that the sovereign fund could invest in.
Yeah, that's a really good point. And mate, speaking of which, any other messages, for policymakers, who might, not realise the strategic importance of domestic phosphate mining?
Domestic phosphate mining is, I keep going back, it's not a sexy thing, right? We dig it up, we crush it, we wrap some biologic around it with our partners, and we get it into the market. The thing that I sort of want to touch on in terms of those policymakers is that to get to that next level and grow, you need that certainty around water and energy across the north, particularly. And what I've found, Todd, over the last sort of 25 years is we've slowly anonymized public service. There are some great civil servants in there doing exactly what we need them to do, but we've gotten so scared of talking to each other. You can't get someone's email address easily anymore. You can't look up their phone number anymore. And what happens, and a really good example of this, is the Gulf Water Plan in North Queensland. Now, there's some 700 staff in the Department of Water in Queensland, right? But they send one poor young lady up there to negotiate the Gulf Water Plan with some pretty, agitated stakeholders.
Where is up there? Sorry, just for people who are listening.
Sort of Julia Creek, so the Gulf Water Plan runs from, Burketown, Normanton, Currumba, down to Mount Isa and back around to Hewenden. And one of the things that I find fascinating is that we all operate as a community up there, and we have a bit of a dust up, but you talk to each other, right? And particularly with more Indigenous groups. And what I've found now is government is so scared of making a mistake that we talk about consultation, but we don't actually talk to people. And so my big example here, and why I bring up the Gulf Water Plan, is that a lot of the Indigenous groups, I talk to them all the time, and they sort of go, "Oh, government apparently has carved out, Indigenous water under this plan. What are we going to do with it? How do we make a buck out of it?" And I'm like, "Oh, well, yeah, we can trade with this farmer, and we can do this, and we can do that." So you've almost got government failure in a process that's then leading to further market failure. And I've been trying to work out a way of describing it, but I keep coming back down to you can't consult. You've got to engage. You've actually got to sit around the table and talk to people, but be okay in taking some risk. And Mike Kaiser, the former DG under Anastasia Palaszczuk, he and I could not agree more about this. And that's my message for policymakers is get out there and talk to people. Don't be scared of a stakeholder that might want to have a barney. That's the whole point, is we need to find a way to have democratic debate again in complex policy work.
Yeah, and I think, in this state especially, but even federally, like, it's a bigger procurement, integrity and ethical problem. People think that, they're gonna be breaking rules by talking to people. Well, how do you get the best outcome without, by talking to people? You can't guess, what people are thinking, and that is part of the problem with communication. People think that they have communicated when they haven't. The bureaucrats and the politicians, like you said, mate, they need to get out into the regions, not just rely on what they're reading on TikTok or Snapchat or whatever it is that they listen to. Get out into the regions, talk to people, sniff it up, feel it, get in there.
That's right, Todd. I think if another way to perhaps say it is when process overtakes outcome, you're going to have failure. And, to put it back into some of the context of what you do, when the military complex of procurement becomes more influential than the frontline staff of the purpose they serve, then you're going to get management failure. And if you look at every great war loss, it's typically the imbalance of process over outcome.
100%, 100%. And mate, actually, two other things which you've spoken a little bit about today and ties into what you just mentioned there, energy and logistics. They're ongoing pain points. Yeah, how are you navigating the high costs of power in Mount Isa? And again, for those people who don't know where Mount Isa is, for our listeners overseas, look it up. It's in the middle of nowhere. And you've got unpredictability of projects like the Copper String project and the likes. What do you do there to make this a viable project?
So I think the first thing to state is that we in the regions do take emissions, we do take natural resource use very seriously. And the challenge for us there is that you want to then connect into a national energy market, which is what Copper String would provide for us. But it is non-economic infrastructure. And so what's happened over the last sort of 30 or 40 years in policy world is that every project needs to stack up. Everyone would have heard that. The difficulty with that is in a benefit cost ratio, public infrastructure just doesn't stack up. Hospitals are not meant to stack up. And so anything with an asset life over 30 years doesn't work in a financial model. But we try and put it in a system. And what that means is that it's a great tool for treasuries to say no to things, basically. And I get that. That's where they come from. The difficulty with that is that when you map out those, secondary and tertiary economic benefit and, go back to my hub and spoke model of Mount Isa, if you have energy at a reasonable price, and so not reasonable, well, let's, for academic purposes, say $150 a megawatt, that is actually at a price certainty that would allow those young copper miners to come on and provide that material, and they could be feasible about it. But what they've got to do is they've got to jump on a plane and explain to a foreign investor that there could be a project coming on. The Minister for Energy last year has done 2 sod turnings by having a grader, turn up with and a backhoe. It's fluff, right? So people see through that immediately. And I guess we're not addressing the root cause, which is Why is this piece of infrastructure there? It's to provide benefit for the next 6 generations, not just this one right in front of us. And so I look at that and I look at, say, the Mount Isa rail line, and the reason that we're heading to the north was Queensland Rail are a commuter rail business. I don't think any of the board members or CEO have ever been to Mount Isa, and I extend the invitation again to them to come up and have a chat to us. But if I was a metallurgical coal miner 400 kilometres from port, I would pay about $1 a tonne. I am 937 kilometres away from Townsville, and I'm paying $140 a tonne, and it's not commodity agnostic. So something is wrong, Todd, in the economic regulatory framework, and it's just not sexy. It doesn't attract votes, but it costs all of us longer in economic terms because we can't get projects on to put revenue in the state of Queensland. So at a point in time, the hard business, the gravity of governing is got to filter down from this new government into the civil service to go, this is just the right thing to do. Now, how do we control our costs? How do we make this work? And that's the danger now, is that we've gone from flicking it from copper string, we've flicked it from Powerlink onto Queensland Investment Corporation, and it'll go around in circles of people. But I'm sitting here now telling you that you could build Hewenden to Mount Isa for about $2 billion with contingency. But again, we're letting process get in the way of outcomes.
Oh, that's crazy, mate. You know, I recently in Japan, and I was having a look around, just thinking what they have done. Now, very totally different geographically as well, totally different. But it just feels like we've wasted the last 80 years in this country. And energy is a big part of that. And I'm a firm believer that we need a buffet of energy in Australia, and nuclear needs to form part of that, in my opinion. Especially if we're going to guarantee pricing and delivery of food to plate for people at home. And you know, again, you know, just for people listening as well, how can you just, you know, provide a bit of a link between fertiliser production and, you know, and what the Australian, you know, family grocery basket looks like every week? Because prices are going through the roof.
Yeah, well, we import about 4 million tons of urea. Urea is made from coal and petrochemicals. We import about just 1.5 million tons of what's called monoammonium and diammonium phosphate fertilizers. So at, let's call it $700 to $1,000 a ton, fertilizer would be, you know, somewhere between 5 to 10% of every single grocery bill for the 25 and a bit million people that live in this country. So it is something that touches you every day, and no one knows about it. And that secondary point I made earlier is the binary nature of when it's not there, that food just doesn't turn up, and not in the volume. So imagine the price fluctuations that happen when that comes through. So what worries me, I think at a third line, Todd, is back to that quality control point of view. The moment, so there was a shipment of DAP went into New Zealand recently. There were all sorts of quality control problems with that, and you know, milk was rejected. Was the end goal there? So you've got product wastage, and then you've got price hikes. Those are the really big sort of challenges that getting the consumer to understand and follow the bouncing ball. That's a big job.
Yeah, right. And mate, you just mentioned quite a few products there that we import, you know, just to put food on our table every day. So, mate, what happens if Australia's phosphate supply were cut off tomorrow due to geopolitical instability or trade disruption, or the inputs into the phosphate supply?
Well, the Intertech pivot plant, which is essentially the same distance south of Mount Isa as we are north. So it's a MAPDAP plant. So it brings gas in, it makes ammonia, it washes the phosphate rock with sulfuric acid out of the sulfur plant from the Glencore copper mine, and it makes synthetic fertilizer. So that's the MAP and DAP that I was talking about. If those supply chains are cut, Todd, it would be about 24 hours before that plant would be nationalised. And that was essentially what people were starting to talk about when the AdBlue crisis came on, because we have no domestic urea production anymore either. So your two largest nutrient imports required for a range of different commodities across Australia, we've got none left. And there's a good chance that Phosphate Hill is going to get shut down. So I would put it in the same way, going back to the COVID example. There's only one large vaccine batch plant left in Australia. It's sitting over in South Brisbane at the Translational Research Institute. You know, these are serious things that I think the good times of our current society have made us not pay attention to.
Yeah.
And to your point about energy, you know, as long as the lights come on, it's fine. But you and I grew up in a time when brownouts were quite a regular sort of.
They were normal. Yeah, it's crazy. So, I mean, and mate, that's, the point, I guess, where, people, they think that their food just magically appears in Woolies, and, they get home and they cook it, and happy days. They don't think really where it comes from, and the inputs that go into it. And that's what's really important. I think the public need to understand, the value and supply chain inputs into, where their food comes from, and that they need to work together, at least understand, how they can work better with industry and government, to improve and shore up our food and national security objectives. But how can they do that? How can industry, government, and public work together to achieve that goal?
Oh, that's a good point. Look, I think probably going back to my earlier point about being proud of everything the land produces. I think we've got a lot of industry groups in ag, a lot of industry groups in cattle. We've got a lot of industry groups in feedlotting or cropping, cotton. But then we've got coal industry groups. We've got minerals industry groups. We've got critical mineral groups. Probably what would be great if you're David Crisafulli is you have the land conference of Queensland, and you have all of us in a room, and we're going, you know what, I want to bang up a power line through your property to do this, but in return, I want to put a new road in and probably a bore for your cattle. Oh yeah, well, geez, that's a good idea. Why don't we do that? Oh, and you've got this reserve here. Fostering a bit of an open conversation, and I keep going back to the Texas example. You're a wildcatter for oil, and you're also a farmer. What's wrong with that? We should all be proud of what the land produces, because we're all have a vested interest in making sure that we can extract it economically and environmentally right. We put it back for the future, for our next generation. But we do it in a way that doesn't cost us millions and millions of dollars in litigation, fighting over who's got rights to what. We should all be there together, working it out together. I think that's it. And I think ultimately, Todd, you could almost call it, solving the revenue problem of Queensland. We do not have enough money coming in the tank. That's our problem. We're spending well beyond our means, and bringing us all together and telling the consumer that we're here trying to drop prices down for you by working together. That's the message.
Maybe we all need to be wearing big hats and send a few down to those puffer-wearing traders in Sydney as well, just to get everyone on board.
Yeah, it's a good idea, mate. I might take you.
So, mate, finally, if everything goes to plan, what does Northwest Phosphate look like in 5 or 10 years' time?
Yeah, look, we'd like to be producing about 1.5 million tonnes of concentrate across Australia, New Zealand, and Asia, going into sort of critical food markets to produce a range of fertiliser products. Downstream, we have a block of land in Mount Isa that we're building with a rail hub that we would like to produce a high quality phosphoric acid in. To create two products. One is what we call a dicalcium phosphate, and you granulate that, and that goes into lick blocks for cattle, and that help the 6 million head of cattle across northern Australia need a lot of phosphorus to keep calves at foot. So we see that as a market to help solve, because all that comes in from China currently. The second product we want to make is a high quality phosphoric acid, which is a feedstock to lithium iron phosphate batteries. So within our phosphate rock, when you crack it open and make phosphoric acid, you can create quite a high quality electrolyte for batteries. The byproduct of that is calcium gypsum, and within that is a lot of light and heavy rare earths, many which go into making military applications and heavy magnetic material, particularly in like F-22s and things like that. So that's our 10-year plan, Todd, is to produce those downstream products, but ultimately keeping as many jobs in Mount Isa as we possibly can.
Oh, mate, it's very noble, number one, but it's nation building, it's legacy creating. And here's hoping everyone, not just key decision makers, but mum and dad and the kids at home. Here's hoping everyone can get on board, for the future of not only our country but for our region as well. Because our partners in the region are looking to us as well. Like you said, we've got big populations on our doorstep. We're all one. We all need to feed each other, and this is really, really important project that goes a long way to doing that, John.
Oh, thank you very much, Todd. Yeah, and like I said, it's been a long time coming, a lot of persistence and determination. But my message to anyone listening is it can be done. Don't let the sheer size of thinking like a pioneer in Queensland daunt you. Get out there and have a crack. There are so many great stories of success in the regions that also, for my urban friends, are some of the most staunch environmentalists you could find, and they have a great ethical framework of doing what is right for our state and what is right for our environment in perfect balance. And just come out and see us, come out and talk to us. And I thank you, Todd, for the opportunity to extend that message further.
No, Johnny Cotter, it's been an absolute pleasure, mate. We'll have to do this again, but look forward to watching the progress of Northwest Phosphate and getting one of those hats. You just heard John Cotter's insights recorded before the crisis, before the prices, before the rationing. John wasn't predicting the future. He was describing the present. We just weren't paying attention. Here's where things stand today. Fertiliser prices are up 50% since February. Farmers across the Northern Hemisphere missed their planting window. The downstream effects on yields, on prices, on the shelves in your supermarket, those are still coming. And Australia still has no strategic fertiliser reserve. Still imports more than 90% of its phosphate rock. Still has one domestic miner trying to restart the last mine in the country, largely without the policy backbone it deserves. If what John said today makes sense to you, if you can see the gap between where we are and where we need to be, share this episode. Not because we need the numbers, because the people who make decisions in this country need to hear this conversation. Send it to your local member. Send it to the farmer that you know. Send it to the procurement manager who thinks supply chain risk is someone else's problem. I'm Todd Crowley. This is Intelligence Optimised. If you want to go deeper, the briefs, the data, the analysis behind what you heard today, you can find us at vaxabureau.com. The semicolon is deliberate. There's always more coming.